and welcome to the Fundamental Value podcast, hosted by Joshua Frank, co-founder and CEO of The Tie. On Fundamental Value, we speak with leading analysts, traditional finance and digital asset firms, and investigate how leading minds in the cryptocurrency space research, analyze, and quantify the value of digital assets. Quick disclaimer, this podcast was recorded and is being made available solely for informational purposes.
Today I'm excited to be joined by Marshall Beard, Chief Strategy Officer at Gemini. Marshall, it's great to have you on.
Yeah, great to see you. Thanks for having me.
So let's start. I need to ask, the experience pre-crypto. You were at Barstool from 2014 for a few years and as an advisor and then as Chief of Staff. So can you kind of talk to us about what that was like? And you were there before Barstool had actually taken on any institutional capital. So curious as to, what that was like, the culture and working with Dave.
Sure. Yeah. Interesting times. I mean, my career is Barstool and Bitcoin, right? So it's been a fun journey. But no, I mean, I was an analyst when I graduated college, and I absolutely hated it. I was doing kind of back office ops, and I sent a cold email to one of the Barstool guys. This was when they were like 6 employees. This was 10 years ago. And he replied that night. I started the next day. I was doing content. I was selling advertisements, and I did that for 6 or 7 years. This was like, when people were in individual cities, before like everyone was in New York. It was a pirate ship, as they said back then. It still is, I think, a bit of a pirate ship. It was crazy. It was fun, a lot of fun. I mean, Dave's an interesting guy. I mean, he's a 1 in a million kind of guy, right? He's built something pretty special with what he built. Love him or hate him, you can't deny what he built is pretty incredible. And it's funny stuff. I think it's funny. I don't follow as close anymore. It's been a while since I've been there, but I still, follow the guys on Twitter and see what they're up to.
Yeah, I mean, we were talking about Donnie Does and some of the old casts. He's still there, obviously, that have been around for a while. So it's a lot of fun. But let's get into crypto. I could ask you questions about Barstool this entire time, but I'm sure you want to transition into crypto. So why leave Barstool, right? Which at the time was this really fast growing, media brand had just raised from the Chernin Group and decide to go into crypto, and why Gemini?
Yeah. So, my last role at Barstool, I was the chief of staff. So I reported to the CEO, this woman, Erica Nardini. She had come to Barstool from AOL at the time. And when I was kind of like taking that role of chief of staff, I hadn't really heard of it before. I've heard of it in like politics or maybe military, but in technology companies, this was 5 years ago, chief of staff wasn't a known thing. It is nowadays. I think a lot of startups have these kind of chief of staff roles, but I remember Googling, what is a chief of staff? And I saw an article by this gentleman, Scott Amenta, actually, who founded this New York City chief of staff group. And at the time, there was like 6 people. And he emailed me. He goes, "Hey, every month we kind of get together at each other's startups and eat pizza, drink beers, and talk about scaling startups, how to spin up HR departments, how to set up executive meetings, how to do whatever, right?" And I joined, and I met the chief of staff to Winklevoss Capital. So the founders of Gemini, Cameron and Tyler Winklevoss, they have a family office, and the chief of staff, this woman, Beth Kurtzen, she recruited me into Gemini. So this was late 2017. I had a career in finance, right? I started my career as an analyst. I went to business school. I did M&A. I did consulting for a few years. And then I went into media at Barstool, and media kind of wasn't really like my thing. I liked finance. I was an early crypto adopter. I acquired Bitcoin maybe 2013 on Coinbase. I was trading equities at the time, and I read about a wallet and an address and all these things that I had never heard about, and it was just piqued my interest. I bought Bitcoin pretty early. Nothing crazy. Didn't hold it through too long, but so I had known about crypto. I'd been involved in Bitcoin. I was always interested in it. This opportunity to kind of go back into finance, into something that I was interested in. And, there was a great opportunity. So, joined Gemini, maybe, 30 or so employees at the time, and left Barstool for it.
And what was your original role when you joined Gemini?
Oh gosh. I was, at the time, we didn't have an HR department. We didn't have a legal department at the time. I was a finance associate, something like that. Yeah.
Got it. A little bit of a jack of all. It's obviously very different, right? I mean, being 30, I mean, how big is the firm now?
I don't know, 800 plus, I think, something like that.
That's it. That I'm sure it feels. You probably don't really remember the 30 people at this point because it's probably just such a blur at this point. Like I'm curious as to.
No, so look, I at Barstool, maybe 10 of us at the time when I started, and a few hundred by the time I left. So scaled Barstool, pretty rapidly through some funding rounds, and subsequent kind of acquisition into public ownership from Penn National, and then here at Gemini, 30 or so to 800. No, I mean, no, you remember the OGs kind of, right? Like there's still a lot of folks here that have been here since kind of day one. Gemini's been around for 8 years, right? There's people that are still here from like 8 years ago, right? And so you remember these folks; they're still here, kind of. They kind of lead the culture and stuff. So I do remember most folks, and a lot of them actually are still here.
And so, obviously, Gemini has grown a lot since you joined the firm, but so has the crypto market. So how have you seen the crypto market evolve since day one at Gemini, but also the client base and who Gemini is serving? How has that changed over the last few years?
Yeah. So like the general market, it's interesting, right? Like I think about this somewhat often. Crypto's only been in the public eye for maybe 4 years now, right? Like think that Q4 2017 when like people say that Thanksgiving or whatever is when people started talking about crypto and Bitcoin went to 17 grand or 18 grand, whatever that
Bitcoin
kind of
price was on
high.
CNBC at the bottom right corner every single day.
Yeah. And so, that's really when people first heard about crypto, right? Like, Bitcoin's been around for a while, but it was a small community. Like think pre 2018, 2017, like everyone knew everyone that was in crypto basically, right? Like there wasn't that many people. It was a couple thousand, like, I don't know, right? Like it wasn't that big. And so that's when people really started like, I mean, I guess there's more than a couple thousand holders, but a couple thousand like builders kind of like, and so, it wasn't that big. And so, it was a nascent asset class at that time, right? Like this was, we entered kind of that crypto winter in mid 2018, I guess, for a couple of years. But it's much different now, obviously. Like, so the market's developed. I mean, what are we, 10x bigger? Like probably more. I mean, I guess pricing is similar to then, but, the size of the market, the brain power, the capital that's here now, it's a completely different thing. So nascent, esoteric asset class back then, still a little bit of those kind of features, but more prominent, more known, different use cases today. So.
And so, you mentioned you started as a finance associate. You're now the chief strategy officer of the firm. So what does that role mean? And what are you doing on a day-to-day basis?
Yeah. If you can think of Gemini in like 3 different maybe factions, we have our technology organization, which kind of encompasses software engineers, product managers. You kind of have like ops area, right? Legal, compliance, risk, kind of functional departments like that. And then what I would consider kind of like the growth part of the organization, which is kind of what I manage. And so kind of a wide swath of things underneath my purview nowadays. But institutional sales, right? So our institutional business encompassing kind of our prime brokerage through our Gemini fund solutions, through Bitria, which is our kind of wealth management, RIA, SMA business. So institutional, our international business. So I kind of oversee all of our international hubs from APAC to, the EU, Europe region, or EMEA. Our marketing department, which is kind of performance, social, loyalty, retention, brand. Our strategy and corporate development team, which does like M&A, does capital markets activities, does ventures through our fund, and Nifty Gateway. So kind of the growth parts of the business, right? The commercial sides of our business, basically, getting people onto the Gemini platform using our products.
So let's talk specifically about one of the initiatives that you've been involved with, which is the launch of Gemini Frontier Fund. So what is the Frontier Fund? Why did you start it, and what are you really looking to invest in?
Yeah, Gemini Frontier Fund is an early stage crypto venture vehicle, right? So this is balance sheet backed, so no outside investors or LP based venture fund. And we invest across the crypto spectrum. So we're pretty agnostic to kind of vehicle types, whether that be a SAFT or a token or an NFT, or geography, like where we're kind of geographic and like structure agnostic. Basically 0 to 1 kind of crypto companies, seed to Series A, with some ability to kind of do some pro rata or follow on. Maybe 50 or so portfolio companies under the Frontier Fund at this stage. So last year was pretty high velocity capital. I think this year, obviously, like the markets have kind of cooled a little bit, like private companies have kind of cooled. So diligence processes are a little longer, kind of a little more intensive. Valuations have come down a little bit, but so early stage crypto, most of it is equity. But we do token deals. We also do kind of like interesting things with kind of NFTs and kind of what I would call like participation, kind of like on-chain participation within the crypto ecosystem. Maybe like how we like view the fund, like where it came from, like the impetus to like the fund was like, one is like we see incredible deal flow, right? So we had, hundreds of employees at Gemini when we spun up the fund. Like we have people that kind of live on, the bleeding edge within, they're in Discord all day, they're in DeFi, they're doing like really cool, interesting, activities, and we see incredible deal flow. We also have our founders who have been in the space for a long time who get, incredible opportunities too. They also do investments through their kind of personal vehicle and family office. And so, we were getting this incredible deal flow, and it was kind of like one of these things was like, why wouldn't we kind of take advantage of like these opportunities that we see? The original thesis for the fund was like pure strategic. So it wasn't return focused. Obviously like, the thesis would be like, we'd make great investments and like they would return, like on like a, an MOIC or kind of basis. But at the time it was more strategic. It was kind of like, does this kind of help Gemini and like our thesis on like the crypto market and our business, right? Like, is there partnership opportunities here? Does this increase like our geographic presence? Does this lead to an acquisition? Does this lead to kind of like, are they building technology that we don't have expertise in? Are they building technology that we don't have kind of bandwidth to build, but like we're really interested in, right? So like there's this very much strategic, small check size, early stage vehicle. Now that's obviously like changed and grown. So like our check sizes have grown up. Like our thesis has changed a little bit to like be return focused.
Can you or have you ever led around?
No, we could. We don't need to. We're not really, we're not constrained by the amount, like the check size that like we have to deploy, or like ownership percentage that like we would want to like have, right? So like we can be pretty flexible. We can go up or down on check size. We've never led around because we don't theoretically need to, but we could, sure. Yeah, we could do anything.
Very cool. And by the way, full disclosure, we are very lucky at the Tide to count Marshall and the Frontier Fund as investors. So cannot speak highly enough. Had to throw that in there, but they're awesome to work with. And actually, when he says strategic, they're actually helpful. So there are a lot of people out there that will tell you that they're helpful, but they're not. But I can attest to Marshall and the team being helpful and actually constantly trying to send us stuff and help us with different things. So in addition to venture, one of the things that I've always given you credit for is I think that you've done the best job at M&A in the space. You pointed out that I missed 2 companies in my list that I had off the top of my head earlier. But you bought Nifty Gateway in 2019 when no one was talking about NFTs. You bought Shardex for MPC Tech. I would say relatively early. I think a few years ago already. OmniX, to kind of move into Prime, Bitria. I was going to say BitRIA, so I'm glad you said it earlier. Bitria to offer services to advisors, and you mentioned earlier BlockRise, which is credit cards. And I guess there's another one which I'm not familiar with called Guesser. So would love to kind of have you walk through those acquisitions, how you think about acquisitions, and kind of your strategy there.
Sure. Yeah. I appreciate the kind words. Also, yeah, one of our favorite portfolio companies. And so if anyone listening, hasn't done a demo with Josh on the TIE and SigDev, please do so. It's an incredible product and we're happy investors in your business. So, M&A, is interesting. So I have a background in M&A. I did M&A, for a few years, kind of in an advisory, capacity. We did some acquisitions at Barstool. We acquired Rough and Rowdy, right? That boxing match company, which was kind of funny.
I didn't realize that was an
Yeah.
acquisition. I never wrote. When did you guys
Yeah.
acquire?
Oh gosh, I don't know. 2017,
Okay.
2016. Yeah. So we've done 6 acquisitions to date here. Our first being Nifty Gateway. I think you might see a little bit of a pattern in the story of M&A here. So basically small teams, outsized impact, right? We found these kind of opportunities, and we put the power of kind of Gemini behind them and kind of our infrastructure and our support, and kind of let these founders be founders still, even within the Gemini organization, and grow their businesses, right? And so Nifty Gateway, obviously, an incredible kind of acquisition, an incredible team. Also, the founders are also identical twins, which is kind of interesting.
I remember that news story coming out on, on the announcement. I remember there was a news story about the twins with the twins for the picture. I still remember that.
Yeah, and look, having that foresight, I mean, Cameron and Tyler, right? Really early into social media, really early into crypto, they were the initial, kind of people that kind of brought Nifty Gateway, to Gemini as well. So, we were introduced to Nifty Gateway through Boost VC. So Tim and Adam Draper, right? Adam Draper's, Boost VC. And, they were in one of their cohort classes. And we were introduced to the Nifty Gateway team. And, at the time, I've said this before, I think the actual phrase NFT, I don't even think that had been spoken into existence more than 1,000 times at that point. It was pretty early, right?
CryptoKitties existed at this point, or was this pre-CryptoKitties?
No, I think CryptoKitties existed, but it was really it. I remember when we acquired Nifty Gateway, they had Gods Unchained NFTs on the platform. I remember buying them and not really knowing what it was. Half the company hadn't heard of an NFT.
I mean, to be fair, I remember I met with you basically the week that you had done it, or you announced it or something like that, and you were telling me about it, and I was sitting there confused. I was like, why is he buying this digital, image store? I don't get it. And you've clearly proven, you and the Winklevoss twins have clearly proven me and many others wrong on that one. So
yeah, on that one, right? Conviction in the founders. Duncan and Griffin, the founders, incredible kind of vision that they had themselves, right? And so conviction in the founders, kind of this new use case for crypto, right? So think about the crypto ecosystem. NFTs are 3 years old. DeFi is 2.5, 3 years old. Main core DeFi DAOs are 1.5, 2 years old. This stuff is still so kind of early, right? And so, this was one of the first things that we saw with use case, real utility in the crypto ecosystem, at the time. And we made a bet on it, right? And so, it's a massive property. Nifty Gateway is an awesome platform. It's one of the best kind of places to get kind of high-end digital art. It's also a really easy onboarding experience and really easy way for people to kind of enter the space themselves. And so that's an incredible platform. They just launched this new feature last week, a massive feature called Publishers, where people can actually kind of self-service create and launch kind of NFT kind of drops on their own. So really exciting product features coming out of Nifty Gateway. Nifty Gateway kind of, it holds its own in the industry. I mean, it's a powerful kind of OG really well built business. So we're super happy with that. We love that team. We love that product. We continue to kind of integrate it closer and closer with Gemini, and it's got, we have huge potential there.
And so, let's talk about a couple of the other ones. So, another one was ShardX. Would love to kind of, hear that, because, that's become a critical piece of Gemini's custody infrastructure, right?
Sure. Yeah. I mean, look, we have what I would consider some of the best custody solution in the world, right? Like, it's 8 years in the making. The most important thing at Gemini is keeping our customers' assets safe, right? And so that's what we do really, really good. And so we have a incredibly robust, cold storage solution and a hot wallet, cold storage solution system for, custodying digital assets on behalf of our users. I mean, we have assets under custody, well into the billions. And so, it's intensive though, right? Like the way that we kind of built it with HSMs and how we've kind of built this kind of system, is intensive on like the human capital side, right? It's a process to retrieve digital assets, to store keys, to kind of do these kind of things. And so, this was a few years ago. We met this team with some of the best cryptographers we had met, right? Like, and they were building kind of MPC technology, and we kind of see that as this kind of next gen crypto solution. And since then, I mean, at the time, there was Curve. There was some folks doing some MPC stuff, but now you see kind of, people come to light. Fireblocks kind of builds on MPC technology. Like you see MPC kind of coming into play, like most recently, but, this was also a very small team at the time. The founder was an incredible builder, and he had put together this group of cryptographers who I put them on the call with our wallet team. And it was just one of the most fascinating calls ever, right? And it was a little like above my level on the nomenclature they were using. And it was just so fascinating watching them talk, and they were both so excited. And the deal just made a ton of sense, and it saves a lot of money for Gemini operationally, and it's also going to be an incredible product for our institutional clients who kind of need liquidity, but they still need that kind of security as well. And so that's kind of the thesis behind that ShardX acquisition. That was the third acquisition I think we had done.
The crazy thing is, I was looking, back in the past of that, you guys made that acquisition or publicly announced it about a week after the announcement of BitGo getting acquired, which is really funny. You probably feel like that was years ago, and now finally the whole BitGo saga just ended. So, kind of funny in crypto time. It's a very long time, but it was, this other acquisition was still in the works, which is kind of funny.
Wow. Yeah. I couldn't even tell you the date off the top of my head of when
I
we
Googled
did
it. It was January 21 where I think you guys announced it. So
yeah. So, look, when you announce deals, like at least at Gemini, we typically don't announce things until we've kind of really closed, right? Like, so you hear things. I think BitGo's an example, right? Before kind of like the closure. So deals get worked on and thought about, and the thesis is built sometimes a year before, right? Like, you kind of build your thesis, you get executive buy-in, you kind of run the gamut. Then there's negotiation, there's deal documents. Like the process of a purchase, right, can be lengthy at times. Even 3 months before is I don't think we've even done one within 90 days. Like there's a lot of work that goes behind that announcement, right? Like up to sometimes a year of work and diligence and kind of the whole process.
And so what would you say has been your most successful acquisition? I think I know the answer to that if you're going to make a claim. And then is there anything that you missed that you just live with that pains you?
So I'll answer the miss thing. No, I don't think so. I think we've done quite well. Like I'm really happy with kind of our thesis, how we do the deals, and the outcomes that we've had so far, right? So I feel pretty good about that. We haven't done 100 deals, right? I think when you get into like that kind of range where you're true serial acquirers over like a prolonged period of time, like there's going to be some misses. You hear stories of like,
I meant decisions where you made a decision not to buy something and you should have.
Oh, gotcha.
No, not on anything you acquired, but on things that you regret not making an offer on or not pushing harder on.
Yeah, maybe I'll speak to that. I won't name names, maybe, but there's some awesome ones that like I sometimes like lay in bed like thinking about like maybe the tie when I met you in late 2018 when you were maybe a one-man show at the time. That was my kind of deal back then. I would have loved that. So. Look, what's the most successful M&A? I mean, look, we've been doing deals
you don't have to.
It depends on how you view things too, right? Like everything's really interesting. Like Blockrise. So the second acquisition we did was we come, as a business, we decided that we were going to launch this credit card, and subsequently we're going to acquire a company to help us. And we acquired this company called Blockrise, who had this incredible founder, this guy Thomas Harrison, and we made a big bet on that. And Blockrise is now the Gemini credit card. I mean, it's a pretty large business within the Gemini ecosystem today. So that's a great kind of retail product. It's kind of transactional based, like crypto trading, transactional based, agnostic, right? Like people still spend cards, whether crypto's popular or not, kind of thing, right? So it's one of these kind of revenue diversification plays. It's got incredible synergies, and I hate saying that word, like within the ecosystem of Gemini as well, right? And so we love that product. We love that card. That was an incredible acquisition. Obviously Nifty Gateway is Nifty Gateway. Shardex is not so much a commercial product as more of like it built a new foundational layer within our infrastructure, and it helps our clients, right? With that. But it's not necessarily like a commercial thing at this time, right? At this point in time. It was more to kind of help build within our infrastructure for the first kind of version 1. After that, Guesser. Guesser is interesting. Guesser was a predictions platform built on Augur. It was kind of these 4 Solidity devs at the time. It was more kind of like an acqui-hire. They kind of were building within DeFi, within Gemini, focusing on Gemini Dollar, focusing kind of within like native integrations for yield type products, just general DeFi. But incredible Solidity devs. They actually came out of the same cohort class from Draper as Nifty Gateway. And so when I found that out, I was like, oh, gotta, that's an extra one there to make a decision on. But no, we made another acquisition,
OmniX,
and that would have been OmniX. So the 2 big ones. So maybe like, as I spoke earlier, kind of like, as you kind of see my thesis, right? It was kind of these small teams with big impact, right? And we kind of did that earlier days. Prices were more appropriate. Team sizes were a little bit smaller. Obviously,
what was the biggest acquisition in terms of number of people that you brought on?
Probably OmniX, which was the last kind of deal. So at the beginning of this year, we did 2 deals, right? We announced them a week after each other. We acquired a company called Bitria, which is a wealth management platform for RIAs and SMAs to connect their clients directly to the underlying using Gemini infrastructure. Incredible business. We have, high conviction around kind of that massive kind of RIA platform and having them gain exposure to crypto. Also, OmniX. OmniX is at its core kind of order management, portfolio management, execution service provider, right? And that's the core of Gemini Prime, right? Gemini Prime is kind of this inclusive institutional grade platform with a multitude of different things through financing, through kind of order management, through electronic OTC trading, OTC, and all those kind of products put together. So that was probably the biggest, as you see, right? Like the earlier deals, it's kind of hard to scale, right? Like you can only find those kind of gems like ever so often, but like deal sizes go up, similar to like the Frontier Fund, right? Like the size of the teams go up, the deals go up. As the market kind of shifts, it's harder to kind of find those kind of smaller teams at kind of like smaller kind of pricing, right? And so we've grown, and so we've already closed 2 deals this year. We ran those concurrently. We have a small corp dev team here at Gemini. Typically don't use outside advisors. We use kind of some legal counsel and internal for diligence, negotiation, valuation, everything, except kind of final deal docs that we'll use counsel for. But yeah, run every deal so far in-house, with a small team. It was me for, the most part. And then one other person on my team, who joined last year, who helped me close OmniX and Bitria. So that's kind of where we are today.
And so I think that actually lends well into my next question, which is, private markets were getting ridiculous. They have since corrected very hard. Do you think that is a permanent correction? And do you think that valuations continue to compress in the short and long run for equity crypto deals across a number of different stages?
Yeah, it's interesting. I mean, I can look at it from Gemini ourselves, right? We did our first financing ourselves last year. We'd never raised capital before until Q4 of last year, kind of like into that kind of upswing. And so we did that ourselves, but we also run a fund, right? So we have the Gemini Frontier Fund. And, like I said earlier in this conversation, we were really high velocity last year. And this year we've kind of toned it down. I mean, I've seen valuations come down. Diligence processes are getting longer.
What do you think the average percentage change in valuation is across the board? Like, what are you seeing? I know it's different depending on
like new seed companies or private. I mean, look at the public markets, right?
Let's start with new seeds, and then I'm curious for like growth stage crypto businesses.
New seeds, I mean, 50% maybe, right? Like I saw a safe come in. Someone was raising like $1.5 million on seed at 10 million cap with a discount. And, I haven't seen that in a long time, right? Those are deals you did not see last year, right? I mean, you were seeing seed caps at 30 million, 40, 50 million, sometimes 100 million, raising 10 million seed at 100 million cap, right? On the safe. Those are, it was euphoric, right? For a little while there. And so we're seeing that come down, right? So our velocity has drastically slowed down. I mean, we're still seeing a lot of deals. We're diligencing a lot of deals, but we're I don't know. I think maybe we've cut 2 checks in the last 2 months versus like, a deal a week or something like that we did last year, right? And so things have slowed down. Valuations have come down. But you are still seeing some large scale layer ones maybe that have come out. And I think that those kind of deals maybe had been structured a while ago, and kind of were able to
feel like you're hitting on the Miston Labs, which just, came out today as one example.
Yeah. I mean, I think I saw that number. It wasn't that crazy.
I think it was 2 or 3 billion. That's a pretty big number. Okay.
Sorry. I didn't look at that opportunity, so I can't speak to it. But there you go. I mean, that's, it's kind of interesting. Like with layer ones coming at there, like it drastically reduces like venture returns, right? Like when I look at like deals and it's like, what is like the profile of this business that can 10x? Like, can this business 100x for me, right? Like at seed stage, like I'm really trying to like accomplish returns like that, right? And so, when you see a layer one at 3 billion, diluted, it's
what is the upside exactly? What is the upside?
Yeah, it's tough. Is this the next?
And then what is the upside for employees as well that are getting issued tokens at that strike price, right? Potentially, right? Or I mean, maybe they're getting just straight tokens, but if they're getting any equity in the business, right, and there's some sort of strike on the option or anything else, right? Like, is there actually any upside for the employees?
Yeah, unlaunched layer one at a high valuation is tough. It's interesting. I think people are kind of grasping on the fact that like maybe this is the next kind of like true alt layer one that like supersedes kind of the Avalanches or Solanas of the world.
Yeah, it's definitely interesting. But with private markets compressing, you've made a couple of acquisitions. You made 6 acquisitions before. There are many companies in the market that have ever decreasing balance sheets and that are struggling. Some of them actually have great product. Others probably don't, right? Some have struggled with product market fit. Some are just, some are servicing retail investors, and in a bear market, there's just a lot less retail activity. So I'm curious as to how you think of M&A strategy in a market like this.
Yeah, so this is like one of the fun parts of like when you're doing M&A, right? Like these kind of like environments are kind of interesting, right? And so it gives purchasers more leverage than sellers, and so it's interesting time. And like I could talk about our M&A thesis like a little bit, how it exists today. But look, we've seen some stuff, right? So there's some distress scenarios out there right now, right? Like we've taken a look at some of these opportunities. Nothing really that like fits our thesis at the time, and those were kind of there were certain actions in the market that kind of like led to these scenarios. So that's not necessarily like bear market scenario, right? Which is like companies that didn't find product market fit, didn't build a big balance sheet, and had high burn, and they might not make it through, right? And so I don't think we're there yet. I haven't seen too many opportunities there yet, but you have to assume like, we're coming. If this market prolongs, like obviously, like we haven't seen like this V-shaped recovery. I don't think personally that we're in this like prolonged bear. I just don't. I just think like the capital that's here, the brain power that's here, like the things that are being built, like crypto's here to stay. It's not going anywhere. The digital like age is here, and like this is like a layer of that world. And so, but with that said, there's going to be opportunities, right? And so you're going to see some of the people that have kind of big balance sheets that have these kind of, opportunities to kind of acquire, that'll start happening. And so we look at all sorts of things. I mean, like you can acquire companies for a myriad of different reasons, right? Like, whether that be regulatory, right? You might, want to acquire someone with the licenses that you need to operate that may take 2 years for you to get or something of that nature, or jurisdictionally, right? Like you might want to, expand through acquisition, right? And so you're looking at a new market, and it's just easier to kind of acquire into there, have a team already built, have a product already kind of in place. You could do kind of customer acquisition, right? So instead of, going out and playing the cat game in consumer finance here, like you could acquire something that has a large user base and try to convert them into your own, right? Maybe, when you saw CoinMarketCap go, or maybe Blockfolio even, things of that nature, right? Where there's these kind of like pools of people that like you could, acquire into. Then there's product based, right? Like if obviously product, like at Gemini, we try to build everything internally if we can. Like I think that it's kind of like bandwidth that kind of runs up. It's speed to market, and it's bandwidth that like would force us to look outside to acquire product. But you could also acquire for kind of assets or revenue or even a kind of like things. We don't really do that. We're not there yet. Our thesis kind of will change over time. Like, we have great product breadth as it exists today, but like as there's kind of like other things, like we might start looking at jurisdictional kind of things. We don't really need to do by regulation. I think, we have that kind of model built well within Gemini and ourselves. But, looking at customers, looking at kind of expansion, and that's kind of like small though, right? So like you're going to see early stage companies that, might have great product, but didn't really get it into market yet and weren't there, and they're going to kind of get wiped out here. You're also probably like, I think this M&A consolidation, like broad consolidation, has been like a topic that people have spoken to. You haven't really seen it too much. You've seen a little bit with the distress scenarios, but like there was actions that led there. Like those weren't happening without those kind of like other actions, right? And so you haven't seen large, maybe BitGo, but that didn't close, and that was the largest acquisition that would have happened, I think, in the crypto space by like notional value, right? So you haven't really seen mass consolidation at like the large scale level yet. It will happen, sure. Like these kind of things will kind of happen. So you can think of like large, older companies, maybe some bigger exchanges, maybe some of these like other players that like might consolidate at some point. Like it might make sense. You don't really see it right now. And then you're going to see kind of bear market flush out kind of smaller companies, and you're going to see businesses kind of acquire into those at like a more of like rapid pace. And that could be, for the reasons I mentioned before, but sometimes it might just be like acqui-hiring and things of that nature, just not letting talent kind of dissipate.
And so you actually brought something up very quickly in there that I want to hit on, which is playing this consumer finance CAC game. So I'm curious, how much does CAC vary over time and through cycles in crypto, right? Like how much different is cost of acquiring a user when Bitcoin's at all-time highs in November of 2021 versus today? Not in terms of a dollar value, but in terms of just like how much is that swinging, like from a percentage perspective?
Like the numbers always swing, I guess, right? I think the more interesting thing to think about in a cyclical market like crypto around customer acquisition costs is more on like when and how you deploy, right? Like, deploying into positive momentum is much better than deploying cash right now, because your people aren't like interested, right? And so like you're spending more money for lower value users versus actually spending into kind of a ramp, or into a upcycle of the market and acquiring high value users for lower dollars, right? So we've kind of, we've done all sorts of experiments over the years. We've done, performance based, we've done out of home. We haven't gone the route that some other players in our space have gone with kind of big brand deals and things of that nature. It just hasn't been our style, right?
You guys have a soccer team, right? Don't you have a soccer team somewhere?
Real Bedford. They are the smallest, biggest soccer team in the world. They're awesome. Peter McCormick from the What Bitcoin Did podcast is the owner of that team. It's a small local team in the suburbs of London. I don't know how soccer works, but whatever tier is the lowest tier you could possibly be, that is this team. But we have conviction in this team, and we're going to have a Ted Lasso story here, and it's going to make it to the Champions League.
I love it. So they're big. So when everyone's going out here, when Crypto.com is spending billions of dollars, or whatever they did on the Staples Center, we have an underdog story by Marshall and the Gemini team, right? Going to win the Premier League in a few years.
Yes, real Bedford. It's fun to watch. They're actually doing great this season, so.
That's awesome. And so let's talk about Gemini more broadly. I mean, I know we actually have talked about Gemini incredibly broadly, but when you first joined Gemini, I think it's fair to say it was just an exchange. I don't think there was much else there at that time. Now Gemini's got an exchange, prime brokerage, RIA services, credit card. I mean, there's so many different things that you've kind of covered. So what would you say is like the bread and butter, or like the core areas of focus? And what are kind of the major differentiators, right? If somebody was going to come to you and say, hey, how is Gemini different than, I'm not going to name any other names, but, exchange A, B, or C, or company A, B, or C in this space, like, what would you kind of highlight?
Yeah, maybe I'll start by saying, I don't think this is a winner takes all environment, right? Mm-hmm. There's going to be a lot of players that have certain specialties and certain things to service different customers and clients. And so it's not a winner take all. Like, look at bulge bracket banking, look at, the world as it exists today, the traditional brokerages too, like, credit card businesses, like all these kind of things. There's always competition, and it's healthy and it's good, and people kind of carve that out. So it's not a winner take all environment. Yes, we were an exchange and custodian basically, right? Like, that's what we had. We had Bitcoin and ETH trading spot. And we were a custodian, right? And now we have a whole breadth of products, right? I mean, what we want to do is empower the individual, right? And so, we obviously believe in the long-term validity of crypto and what it brings. I mean, the novelty of self-sovereignty and all these kind of interesting things. Like, I mean, it's world-changing stuff, in my opinion, right? And in our opinion. And so we have this incredibly long-term view, 100-year business, like we're here forever kind of play, like, the ups and downs. I mean, we've been through these market cycles. Cameron and Tyler, they've been in this industry for quite some time. Like, we're focused on the long term, right? I mean, we're here for the long play.
I think it's pretty funny. Everyone on Twitter always talks about like this, this meme, like, oh, if you bought Bitcoin in 2010, 2011, there's no way you would have, hodled through all of this. And, everyone forgets that Tyler and Cameron they're probably the world's best hodlers.
Probably, right? I mean, other than maybe Satoshi. But no, I mean, yeah, they have high conviction. I mean, it's pretty incredible. Their story is really, really interesting. It's really awesome. It's hard to like not have, it's kind of like, it's one of these scenarios where it's like you have to respect what they've done, right? It's like it's too cool. So, yeah, and sorry, just to get back to your point,
differentiation, yeah, and
differentiation. Look, it's not a winner take all. Gemini's kind of always been kind of this trust, security, compliance first business, right? Like, that is our ethos, that is our core. It's fastest tortoise in the race kind of model, right? Different some competitors, and there's exchanges in Southeast Asia, there's up and comers, there's people that have done things differently over time, and it's like, it's interesting. And I can look at innovation, and I can look at people who move really fast and build incredible products, and look, they're helping bring people into this industry at all, like, right? Rising tide lifts all boats. I mean, it's quite interesting. Like, when we were raising our financing round, like, support from the industry of like other people that like you could consider competitors who like wanted to be part of it. Right. And so it's kind of really cool and interesting to see that.
I mean, I think one thing you guys do well is that is really conveyed in the branding, right? In that, like, when people ask me why Gemini is different, I was curious if you were going to have a different answer than that, but I say it's actually a platform you can trust. And I think that's the you've never tried to get across that we have the most assets, we have infinite leverage and infinite products, but it is like, hey, put your money with us. We're building a compliant business that's working with the regulators. That is, where you can trust the custody of your assets. We'll get insured, right? I mean, that's how I think of Gemini, and it sounds like you're kind of in the same boat.
I mean, yeah, that's what it is, right? Like, we didn't launch until we had our trust charter with the DFS, right? Like, we're a New York State Department of Financial Services licensed business, right? I mean, we have annual audits, we have capital reserve requirements, we're under New York banking law. Like, it's intense things that we built. We have a massive compliance and legal team. I mean, we put a lot into that, right? And so you see it shine in the institutional business, and people call us kind of at the top of the list for a lot of different things. And our relationships with regulators, locally and globally, is pretty incredible. And people come out and reach out to us like, how did you build this? How did you think about this? Like, how should we think about this? Like, and we're part of that. I mean, we're the first VASP in Ireland. Recently we have partnerships with banks across the globe. We have, multi licenses across the globe. This is kind of what we do. And you kind of sign into that when you become a Gemini customer, and when you kind of work for Gemini or invest in Gemini too, right? And so, you don't come here unless you kind of believe in that model. And sometimes, like, when I think about growth, like, it makes my job a little harder, right? Because I want to do a lot of different things, and I want to move really fast, and crypto is so dynamic, and there's things that I like to do within decentralized finance and things of that nature. And sometimes it's a little harder for me. But it's because we build things the right way. We're very thoughtful in how we build things. We work with regulators when we build things, when we launch things. It allows us to kind of build the products we want in a way that we know we're going to, be okay with. So.
And so, like other exchanges, or like every exchange has seen volumes, fall, over the last few months, right? It's natural. Less people are interested, and prices have gone down significantly. So even if people are trading the same number of Bitcoin, right, the Bitcoin is worth 60 or 70% less than it was at some point. So how do you plan for and survive a market downturn? You actually said something interesting, which when I'd written that question, I wasn't thinking about, which is the credit card business, which I actually thought was pretty interesting, about how that's a little bit of a bear market resistant business. But what do you kind of need to do to because everyone who's been in the space for a while, knows that the market looks like this, right? Or at least has historically looked like that. Hopefully over time it goes like that, and then eventually it shoots up and goes to the moon and we never come down. But how do you rationally plan for a bear market, and how do you emerge as a winner out of this this recent downturn?
Yeah. And so I think what we've done over the last few years is revenue diversification, right? And so, I look at some comps, right? And I see that like transaction based is still like a large part of their kind of revenue composition, where ours is, transaction based revenue isn't, I mean, it's still the leading, piece of our stack, but it's not like, a massive piece of it, right? Like it's a big piece of it still, but we're doing a lot to like diversify, whether that's through staking, whether that's through custody, whether that's through the credit card, whether that's through Nifty Gateway, whether that's through stablecoin and interest expenses, whether that's through financing, through our prime brokerage desk, right? We've kind of built this kind of product suite that's, kind of sticky and sometimes price agnostic. Look, we still make money when crypto goes down. I mean, we make money we like volatility. Like, obviously we like it when it goes up and to the right. But, there's still, money to be made transaction wise on the way down. But, think of like, traditional equities markets, like, they were able to kind of go to zero fees because the fees were a smaller piece of their kind of composition, right? Financing was a big piece of it, lending, asset management, things of that nature, which allowed them to kind of do that to draw people in. And there's fast followers in the industry once that kind of happened, right? And so we've been building towards revenue diversification. I mean, we can't be reliant on fees forever. Like we saw what happened in the equities markets. We have to kind of be prepared for that. So businesses like the credit card is awesome. We love the credit card. It's like one of the best kind of like bring people into crypto. You don't need to know when to buy, how much to buy. You go about your daily business with behaviors that you're used to, like swiping a credit card, and you kind of earn crypto. I mean, I buy crypto every single day, many times, right? When I buy my coffee, the card is really cool. I don't know if you have it, but it's pretty awesome.
I'm still on the wait list. You got to figure out how to get me.
I gotta get you. Yeah. So, those behaviors are still there when people like aren't trading, right? And every swipe actually like puts more volume and liquidity like into the exchange as well too. And so, and you can also like, put your rewards right into a yield-based product, right? Or you could sell them, you could transfer them. You get actually instant rewards up to 3% on over 75 cryptos on Gemini. It's a really cool card. But those kind of products, are sticky, and they aren't reliant necessarily on transaction fees.
So I actually have a kind of a similar and related question. You mentioned traditional exchanges don't really rely at all on transactional volume. But one of the things that they rely very heavily on, like NYSE and NASDAQ and others and CME, have really big data businesses. In crypto to date, exchanges primarily have made all that data available for free via API. And I'm curious how you guys, or if you guys have really started to think about the opportunity around the monetization of data. I mean, my thought is generally exchanges are making it primarily available for free to attract liquidity because there's just such a large number of exchanges. But I imagine over time that number consolidates.
We thought about it a little bit. Right now, we're giving it for free. I think that like the grand vision of like crypto, at least within like the capital markets, is like this 24/7 global capital market like environment, right? Where people can trade tokenized securities, crypto items, globally 24/7, right? Like people in Thailand can buy a share of Apple stock at any time, and they don't have to work on like these like localized exchanges that have 7 counterparties, and things end up at the DTCC and everyone takes a spread on the way there, kind of thing. Like interesting like podcast I listened to recently on Invest with the Best, where SBF was talking about how he views kind of this traditional equities world, and how they've recently put equities into their product. And I agree like completely with it. Like this is really convoluted, insane model that will eventually like be broken up, right? And so I think that's where we're going. I think that's like what will happen. It's probably going to take a little bit of time, but that's kind of the model that I see.
Cool. And I got a bunch of questions left, so let's go let's speed run through these because I'm curious.
Yeah.
So biggest areas of growth for the firm. What are you most excited about?
Yeah, credit card staking. I think staking is really interesting as we list more proof of stake assets, and getting people into kind of earning yield on their products through kind of the staking. I think is really interesting.
Have you guys thought about hedging that business? Because that's the question I always have with staking businesses. I'm like, well, it's kind of ish like an index fund, right? Where people are giving you money and you kind of have some market risk, right? Just with the assets going down. Do you guys think about hedging the staked assets, or are you basically just like, look, however the market does, we're going to get, a percentage of that in rewards?
No, it's an interesting thing. No, we have thought about that. I mean, some clients have asked like how they can like hedge out, and like, what would be the model? They would, basically sell the future. And so they basically just get the yield only and like aren't price agnostic. And so, no, we've thought about that. We don't have that yet. I mean, we're waiting for the merge. We actually don't have ETH, available for staking on Gemini today. It's coming soon. We're kind of, still tightening that product up.
So, you talked about Gemini Prime. We've talked about institutions a bit. As more traditional institutions try to move into the space, what do you think the major challenges that they have in the services that they need are to boost adoption and to make that process easier?
Yeah, I mean, I think UX is something I think people are used to kind of like the UX in TradFi is really something. I mean, just looking at Bloomberg Terminal today, it's just interesting how that's still the model, right? And people that use like Swift and people that use kind of these like legacy systems. I mean,
oh man,
it's like,
I used to know how to write Swift. It's dreadful. The Swift book is like 1,000. So I worked in post-trade settlement tech out of college. There's like, I had like a Swift book, like 1,000 pages long, going through to try to find Swift code. It is horrendous.
I spent a weekend at Gemini once, trying to build a model, reading Swift documentation for a large custodian partnership that we did. It was crazy. But so UX, right, and like solving those. Obviously, compliance, trust, risk, like all these kind of things. Like those are like the main questions. Like when we do DDQs, I mean, we do hundreds of DDQs a year, basically, and like the questions are usually the same. It's complexity, right? Like these are just things that people haven't heard of, right? Like, you ask people how like to explain crypto or to explain Bitcoin, like you get so many different answers. Like some people just have no idea even how to articulate it yet, right? So you need to be able to speak language. You need to be able to clearly articulate kind of these products, these features, like how these things work. You need to do demos, and you have to like set up two-factor authentication. Like they've never, like most like people haven't done that before. Like there's all these kind of things, and then think of like trying to engage in DeFi as an institution, and you can't have your analysts with MetaMask accounts and private keys written on a piece of paper in their journal. When you're moving size, right? It's like you need solutions. People try to set up a hardware wallet. I mean, try to set, it's hard even for crypto native folks. Like it's always like a little like, when I'm setting a new one or moving assets. Even when I move assets on chain today, like I've been in this space for a while. Like every time I click that,
I have such a panic attack. I still quadruple check that it's the right address, even if I copy paste it.
Yeah. So, there's still these kind of barriers to entry. But it's education first and foremost, and that's institutions and or kind of retail type clients.
All right, couple more here. It's the Fundamental Value Podcast. Have to ask you about fundamentals. So, how do you define fundamentals for digital assets, and how has your understanding of fundamentals changed over time?
Gosh, I don't know if I have a good answer for you on this one. Fundamentals are hard for this asset class, right? Like I look at gold, I look at supply and demand, I look at like open interest, I look at like different like things that like I can somewhat relate to. Like you could look at charting, you can like look at different pieces, but at the end of the day, it's like really interesting with this asset class is it's kind of not backed by certain things, and so momentum and things of that nature. I don't know if I have a good answer for you there.
Like a reason
I'd love to hear how you think about it, I guess.
Oh, I mean, I also don't really think there are fundamentals in this asset class, which is the whole kind of joke about the podcast name. So, look, I think there are certain things. We're actually working on some really cool things. I got to show you this, but we're trying to pioneer some new things like cohort analysis on chain and looking at like if a user goes to a DApp in month 1, how much they come back in like month 2, month 3, month 4, month 5. So how well these applications retain their users, fees paid to like try to back out like an LTV of a user on chain. So we're like trying to work on quasi models, but obviously the fees don't always accrue to the token holder. It's different for every single type of token. How do you even consider somebody like to be using something? So like we've been actually playing around with a ton of GameFi stuff to figure out like, is it actually easier for GameFi to back this data out? But like, what is a transaction? It's very difficult. It's impossible, which is why I host this podcast. So I can bring people on the podcast that are a lot smarter than me, like you, and pick your brain, right? I mean, that's the whole idea. So I appreciate.
I wasn't smart enough. I wasn't smart enough to catch the.
You got all the rest of the questions that plenty of other people wouldn't be able to answer. So to be fair, you're not a hedge fund manager, right? And a lot of the folks that we ask are. So, but with that said, I will ask you one more token question, which is I've been asking everyone. I like it. 24 months. Let's actually start. You started at Gemini. There were 100 coins in the top 100 by market cap. This was February 2018 or late 2017 or whatever, right? Presumably a lot of those are out of the top 100. If you take that same time frame, 4.5 more years down the line, how many assets do you think are left?
Yeah, I mean, I bet we could do this easy, right? We could look. I think from 2018 to right now, the top 100, 90% are different. 90% are out.
It's actually a bit higher than you think. because a lot of the tokens that were like top 10 are like 80 now. But to your point, a lot of like the top 10 or top 20 are just way, way below where they were. Like EOS is still hanging on for some reason. And there are a few tokens like that.
Do you know what the number is? Because I said 90%. Is that too high?
I can tell you right. I can tell you right now. It's
on SigDev. Can you pull it up?
I can't. I actually give CoinMarketCap a lot of credit. They have something called CoinMarketCap Historical, and you can go back to a particular period of time. I've shouted them out before. All right, so you started. February 2018. Let's just go into there. It was Bitcoin, ETH, XRP, Bitcoin Cash, Cardano, Litecoin. Then it gets a little weirder. Neo, Stellar, EOS, NEM, IOTA, Dash, Monero. But it's a lot of the same names. So
those guys are still in the 100.
They're still there.
Those guys are still in the 100.
Once you start getting to the bottom, right, you start to see like Dentacoin was the 55th largest coin. When you started Dragon Chain. So there's a lot of what the bottom is basically all removed, but the top 50 looks pretty similar.
Okay, 50%. So then thinking in the future, 4 years from now, I mean, I guess like using the logic of like the last one, right? The probably top 30 tokens today, they're not scams. Like they're not gonna like die kind of thing. So are they still in the top 100? Yes, probably, meaning 50% of the tokens in the top 100 won't be there in 2024.
All right. So last question. What's your hottest take?
Yeah, I don't have too many hot takes. I saw this in the pre-read. I don't know. Bitcoin 500K is programmed, maybe. I think it is. That's my hot take right there. Bitcoin will hit $500,000.
Any time frame? Like next 5 years, next 10 years, next 2 years, like general range.
Within 10 years. Within 10 years. Which, I mean, look, if you look at the return profile, then, you know, what are we looking at?
I mean, that's a guaranteed, if that's true, that's a guaranteed like 26, 27 bagger in the next 10 years.
There you go. But I think it's programmed.
It's programmed. You heard it here first. So let's end with that. Bitcoin 500K is programmed. So where can listeners find you and find out more about Gemini's offerings?
Sure, Gemini.com. You know, go there. Ping me on Twitter at BeardMars, BeardMars.
Awesome. We'll put those in the description. Marshall, this was a lot of fun. I hope I have the pleasure of bringing you on again in the future. I know this was the first time you've ever agreed to doing one of these things publicly. I'm sure, I'm sure you've had many opportunities. So I'm eternally grateful, and thanks for coming on.
Of course. Thanks for having me. This was a lot of fun.